Watch this before you finance a car. Meet Michael. Michael is 34, steady job, decent income, and last Saturday he signed a single piece of paper at a dealership that quietly committed him to the next 6 years of his life. The number on that paper was $36,000. Michael walked out of the showroom feeling brand new. The keys were warm in his hand. The engine sounded strong. For one afternoon, life felt upgraded. What Michael did not realize is that the smiling man in the nice suit had already done the math better than he had. By the time Michael drives his new car off the lot, it has already lost between 10 and 20% of its value. That is not an opinion. That is the hidden math of every new vehicle sold in America. Let me show you what that number actually looks like in your real life. A $36,000 car, financed over 6 years, at a dealership rate of 7% puts Michael's monthly payment somewhere around $620. Most of the early payments do not even touch the principal. Most of the early payments quietly pay the bank, and most buyers never look at their amortization schedule closely enough to see that, for the first 2 years, they are essentially renting their own car from a lender who never has to lose money on the deal. Now let me show you something most people never see. Michael has a friend named Daniel. Daniel bought a 2-year-old version of almost the exact same car. It had 30,000 miles on it. It was the same trim. It was the same color. Daniel paid $25,000. That single move saved Michael more than $11,000 before he ever turned the engine on. $11,000 is not a small difference. $11,000 invested at a modest 8% return over 25 years quietly grows into more than $70,000. This is the part nobody explains at the dealership. The finance office pushes longer terms because longer terms make the monthly payment feel affordable. A 72-month loan makes almost any car look survivable on paper, but longer terms quietly stack the deck against you in 3 directions at the same time. First, you pay significantly more in total interest over the life of the loan. Second, you remain upside down on the loan for years, meaning you owe more than the car is worth, which traps you if life changes. Third, you carry the same full coverage insurance requirement the entire time, because the lender technically still owns a piece of the vehicle until the last payment clears. None of these facts feel painful in the showroom. None of them feel painful when the salesman smiles and says, "We can make the payment work for you." All 3 of them feel painful 3 years later when Michael wants to trade the car in, upgrade his home, write a check for an emergency, or simply move on without owing more than the car is worth. That is how a single decision at a dealership quietly shapes the next 6 years of your financial life. If you do only one single thing after watching this whole video, do this one. Before you sign anything at a dealership, separate the car decision from the financing decision. Pick the car first, in writing on paper, with the specific trim, mileage, color, and out-the-door price. Then go home. Then check your real budget without the salesman in the room. Then comparison shop the loan itself through a credit union, an online lender, or your own bank. Then come back the next day with the pre-approved rate in your pocket. This one move alone has saved real buyers between $500 and $2,000 in interest on the exact same car, with the same dealership, on the same Saturday. If this showed you something about a future purchase you did not know was happening with your money, subscribe and hit the bell, because the next number that quietly tries to shape your financial life will not wait for you to be ready for it. We break down the hidden math behind the decisions you face every single day, without the hype and without the sales pitch. Now back to Michael. Michael's problem was never that he wanted a nicer car. His real problem was that he treated the moment at the dealership like the final answer. It was not, it was the opening offer. Do the math before you sign. Make the move that matches your budget, not someone else's commission.